we doing? Scale of tired to sleepy to awake to stoked. How are we doing? That's what I need to know. I've got Reddit on the screen. That's a stock that does media. So you're gonna want to take a look at that because could be in an interesting spot, I believe. Lot to look at. Don't know what you want to look at, but you can see comments on YouTube is where I see comments, so that's where you want to be. Okie dokes. YouTube. youtube.com. If you're not super familiar with it, I can't remember what I was watching. This? No. Oh dear. I guess we're gonna just go rando video here. Really like this song right now. Last couple of days. And this Norwegian thing. Let's see what's Charlie's up to. Oh, that's a while ago. Whatever, let's just get yelled at for a few minutes and then that'll wake us up.
Folks, the Fed just turned the money print.
Okay. The printer is printing.
The central banking government think,
There's your cartoon.
tons of island bucks. Get the money second.
Blah, 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 blah.
But everyday workers, the people at the fish market.
Okay. Blah, 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 blah.
I mean, look at all.
What
Another, they're working harder than ever, but they can barely.
Really
island
focus
analogy
on
teaches
this
us anything. It's that when this. And
graphic.
look, he's already
Here
right.
we go.
Dallas Fed President Lori Logan said the same thing. She said if repo rates keep rising, the Fed will need to begin.
All right. There you go. Some Fed info for you. And then let's look at stocks. So here's the dealio. The SPY went pretty much nowhere on Friday. Pretty much nowhere, right? Oh my god. Very sneezy, excuse me. Alright. So what is this average daily? This is over the course of a year. This is what we want. Alright, so what have we established? We established that the SPY went nowhere on Friday. Bitcoin went down. Sure, crude oil went up. Oil stuff went up a little bit. This is actually natural gas, I guess. Gold. God, we've got a heck of a delay here. What is going on here? A 100 gigabytes available on this disk, and we have a delay. Silver is hanging out here. memory moves. SanDisk had a day, I think. Okay, so NBIS. Don't really want that. It's pretty choppy. SanDisk is already gone. But we talked about SanDisk. There was literally a video about SanDisk within the last 2 days. Titan just finished that move on earnings. This is pretty liquid, so we're just going to ignore this. Too much moves, too much soon little bounce. CLSK, TEM is holding in there. Rare Earth holding in there. BBAI, Circle, Riot, Bitcoin stuff, blah. Abercrombie and Fitch. This is actually a pretty good spot for Abercrombie and Fitch, I believe, on a 10-day. Oh God, how do we do 10 days? Where's that 90? So we had a little pullback, and now you can risk 90 pretty clearly. This is the close, so you can also close risk that day. So that's interesting. That's one that's interesting. You know, we talked about SanDisk yesterday. I can see comments. The comments literally show up on the screen, just so you're aware. Your comment will literally show up on the stream right now. And then Neo sold off. Affirm. This thing is illiquid. It's actually not illiquid, but it's... Why does it look weird? It just looks weird. What? I don't know what this move is on either. Anyway, it's a healthcare stock. I'm just going to ignore it. Maybe to my own detriment. But, I don't know. It'd be interesting to mention. It's at 120. It's above that level. So, INSP. Do they make money? Do INSP ticker make money? Oh boy, doing this on a Saturday is like tiring. The business is profitable. Oh my God. What a find. Okay. Quantum, ugh. A-Lab after that day is yucky. This Mendel's thing is, this is a move, but Bitcoin nukes. Wow, this thing got crushed. But you know what? That's why you risk this level. So it closed here, 77. Wasn't easy to risk. You definitely need a stop, an automatic stop. Or you need to just sit at your computer, but I prefer the stop. This open door is definitely starting to build out here. I don't know that you want it right now. Quantum, whatever, QS, it'll pull back. Damn, I missed ASTS. A lot of stuff that I already missed here. Actually, I mentioned some of it, but I didn't buy it. Okay, what about this thing? IoT. 45. Is this coming out of anything? Not really. big change of character. IoT, revenue, earnings, guidance, all up this quarter? Or no? My keyboard is totally messed up, by the way, as you can see. IoT is the ticker. Okay. Yeah, good call. I hate the little suck up ChatGPT. Earnings per share beat estimates a little bit, actually a lot bit. Revenue's up, but I can't tell if revenue beat estimates. Did revenue beat estimates? Did revenue beat estimates? Okay. So that's kind of interesting. IoT. Public tickers is what we want. Public stocks. Iron is doing nothing. Marvel pulled back. ONON. Alright, that's probably enough of that. And then what about the watch list? This thing got crushed. Battery up a little bit. This thing is a new IPO. Mags looks interesting. Corey is still hanging out. BTU failed. Ulta Beauty. iRobot getting some volume. Not a lot of volume, but a lot compared to what they had. And then Rubrik is definitely interesting. So IoT and Rubrik are both those earnings plays. FLS is kind of interesting. I already bought Reddit. Talked about it, I mean, as well. And then I guess FLS. Lemonade's still interesting. ATI is a little slow. ATI and just get rid of this. Powering up there. NXT is holding in there. Tesla is up a lot. Fastly, interesting failure there. Okay, BW's gone. GSAT is gone. Guess they're so slow. Frog went yesterday. A little choppy out of that. AEIS is interesting, but started to go. It's gotta be these tickers up here. What happened to Core? Core is just huge strength. So something like this. FLS, ATI. They're just slow. iRobot. It's pretty crazy. Okay, so there's 6 stocks, if you can believe it. Let's get rid of this for a bit. I do think that IoT and rubric start with ANF. Okay. Let's jump into a little breakdown here. Could probably get rid of this stream continues thing. Or change it to say to that. Just to make it crystal clear. Oh my god. If you do have a ticker, go ahead and drop it in the chat. Otherwise, we're just going to start talking here. So, Abercrombie Q3 earnings. Billion in revenue, beat consensus estimates. 200 million in revenue, 10% up year over year for INSP. Inspire Medical Systems. Treatment for sleep apnea, 200 million. Is that CPAP? It is not. Okay. And then this is billion revenue, up 10% year over year. Hollister grew 15%. Okay. $1,000 into these 2 stocks can surpass your full-time job. I'm not a financial advisor, but Abercrombie & Fitch, ticker symbol ANF, just had Q3 earnings and reported over $1 billion in revenue, up about 10% year over year, and 15% growth in their Hollister brand. So it's not that you don't see a lot of people wearing Abercrombie & Fitch apparel. You know, you see the Hollister logo maybe more often. Big growth there. And other retail stocks are doing well as well. Ulta Beauty doing awesome. Kohl's doing awesome. Victoria's Secret had good earnings as well. Victoria's Secret during COVID was down to about, 0 retail sales, right? And now it's up to 40%. So, e-commerce definitely helps these stores. Maybe they sell more in e-commerce than off, actually. But for a lot of these companies, when do you go to a retail store? You need something fast, or you think you do, right? You get that impulse, or you want to try it on. And in the case of Victoria's Secret, you might not believe it, but women can discern, like, they're very smart creatures. 1/16 of an inch change in the size of a bra. So that's why some of these stores are still sticking around. People want to try stuff on. For Abercrombie and Fitch, Hollister, we can look at the same store sales versus e-commerce, but the earnings were solid. There's one company as well. If retail is not your thing to invest in, INSP is the ticker. It's a healthcare company, Inspire, and they do CPAP, sleep apnea solutions. Over 100 million in revenue, up like 7% year over year. And sleep apnea affects, tens of millions of people in the US alone. And you can wear a mask, that's the whole CPAP thing. But what they have is an injectable. So it's a little bit, less or more intrusive depending on how you look at it. But people are buying it, doctors are buying it and recommending it, whatever the case may be. The chart looks solid as well. And this is one that is not directly after earnings. This is built out of flag. So let's look at that. Let's talk about what a flag is. We're not really going to talk about it. We're just going to look at this particular one. And let's jump into it here.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, so this is Abercrombie and Fitch. These are their peers. I'm sure you're familiar with American Eagle. Maybe not you, but Gap, Urban Outfitters had great earnings as well, and Lulu. So let's look at the actual chart for this, and just to get one more look. This is Inspire. They use these little pulse systems, neurostimulation, to help with sleep apnea. It's FDA approved. It's stimulating the tongue and airway muscles during sleep, preventing blockages. So it's approved by the FDA. This is why we have the FDA, for things like that sound a little fantastical or intrusive. But what's intrusive is not being able to breathe while you sleep. So let's look at these charts. Abercrombie and Fitch just had earnings, and the beat on earnings. And it's having a nice little pullback here, which is, it's fine. The market is doing great. The last 2 days weren't crazy, though, compared to the week before. So the Abercrombie and Fitch day must have been on the 27th, 28th, 30th, something like that, right? It was on the 25th, actually. It was a little before that. So it was on this big day. So we have to be a little careful, I guess, because at a time when the SPY drifted up, the percents don't really matter. But you can say, here's a comparison that might make sense. It went up 2% on the 25th, and it went up 1%, little 1.25%. After that, Abercrombie and Fitch, way more, right? 40%, and then it went up, way less than half of that. So the earnings definitely mattered. We can look at the earnings in detail. Well, look at the revenue, look at the profit, look at the guidance. That's pretty much all the detail is. But the point of it coming back is it's not really too much worry about the weakness of the company. It's more about now you can get a nice risk level off of. The second day is pretty awesome right now, 95. So if futures stay sideways on Sunday, and then on Monday maybe we get a gap up or just a hold here, that's perfect to risk here. If we do gap down, then you can risk that high volume close. It's a little bit wider of a risk, a few dollars, which means you need $30 of upside potential, but ideally it just holds here. So that's the play for Abercrombie and Fitch. And for Inspire Medical, this is a recent liquidity push. This was on November 24th. We actually definitely want to look at that. But the point is, it's kind of a little flag here, and it looks pretty sloppy on the 24-hour, the daily chart, whatever you want to call it. But once you sort of zoom in here, it starts to look pretty. So this is pretty clear breakout level 142. I'm not saying you definitely want to buy breakout levels, because sometimes they can reverse. I'll just give you a little example. ASTS, maybe you were trying to buy over this high or whatever. This is actually a terrible example because it did go. But the point is, sometimes you can have a little bit of a fake out. So, yeah, this is a terrible example. The point is, sometimes you may have experienced, if you're like me, you buy a breakout and then it doesn't break out, or it does and then it fakes you out. So what makes more sense is, instead of buying at that exact breakout level, if everyone's watching it, yes, there will be a lot of buying there. But instead, what you can do is look for a level that makes sense to you, aka that you're going to actually follow, and buy off of that. So maybe it's risking yesterday's, or this is not yesterday, this is actually Wednesday's high, depending on where we go. So throw in a stop that's right there at 138, or watch your phone, check it on your phone. And if it just moves away from there, then so just to see what that looks like over here, this is Wednesday. So risk this level, risking $1 to make 10. And, is that reasonable to make 10? It's very reasonable. I mean, that's barely a move at all on a 5-year chart, but it's not really realistic to look at a 5-year chart. This is a little more interesting. $10 is from here to, it's like 4% or something like that. It's fine. So that's why a tight risk is really great. You're going to stop out a lot, maybe 70% of the time, which I know sounds like crushing, but hey, do you want to have small losses, or do you want to have a lot of wins? You can choose. So yeah, it had a nice gap fill here too. I'm not saying that gap fill always matters, especially with tiny stocks, but this is not a tiny stock. This is actually a profitable company. We can look at that exactly to verify that. But it came up over this level of price agreement prior to earnings, and it's holding. So that's a really important level, 130, kind of this rejection and then breakthrough there. So if it does pull back, that'll be another level for you. But those are the stocks. And I forget already what we were trying to do. We want to talk about INSP profitability. And then it would be great for Abercrombie and Fitch to talk about the revenue, the guidance, the sales in detail, aka did they increase? And they did. So that's really what we want. This isn't like a triple digit increase, blowout earnings or anything like that, blowout, profit, or a surprise as far as I know. But what is happening is 7% increase year over year in revenue. I think I might have misspoke earlier about which company increased by 7%, but anyway. And then that beat consensus estimates. And the profit, I just like to say profit instead of the earnings. Earnings is confusing in my opinion, to me. So profit also beat expectations. So that was a little bit of a surprise. And then guidance also beat. So yeah, outlook and guidance lifted just slightly, but when all three are lifted, you don't have to worry about one of them dragging down what could otherwise be a really positive story about this company. And I'm not saying to buy on a story, but this is about as disconnected from a story as you can get, right? I mean, it's a numerically grounded story. So if we want a story, another way to look at that is it's actually rather uninteresting as far as what we've unearthed about how the company's doing. They're buying the clothes. Like I don't know how to get excited about this. Hollister does nothing for me, but I'm not 12 or whatever. I don't know. Here's some other retail companies, though, that we want to look at ticker-wise. AEO and Gap. Let's start with those. So AEO definitely looks interesting on earnings, and the little pullback is fine. Gap, same deal. Urban Outfitters, same deal. Lulu has earnings coming up, but moving up in anticipation, and Kohl's moving up as well. So this isn't like a random ticker I just pulled off the shelf. The whole sector is moving up. Does that always mean that it's going to keep moving up? No, but that's why we have risk levels, here and here. So that's Abercrombie. And then as far as INSP, that looks like this. And as far as what they're up to, their profitability, we wanted to check on that. They had revenue up 10% every year. Gross margin, you don't like the word gross because that doesn't necessarily mean they're profitable, right? But maybe they are. Blah, 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 blah. Share repurchases. Earns real profit, generates cash. So somewhere we're going to need to see I guess earnings per share being positive. That's profit. I'm sorry to be so facetious and just cynical about this, but it does sometimes feel when you read through these, it's like adjusted non-GAAP earnings per share once removed, and it's like you just want to ask them, are you profitable or not, right? And it seems like every indication is that this company is, so we're just going to have to say that. They were unprofitable, and now they're not, I guess. So this is another good measure, is cash flow. I guess if they didn't have this, they would be reinvesting it, buying a bunch of new, development equipment or something. So that's good. If there's no free cash flow, it's kind of ironic, I guess, because they would say, great, you're reinvesting everything in the business, but we're not trying to grow the business. We're basically vultures. We're just trying to make money for every little, 10% move. And then if it does move up 10%, that's great. Maybe it'll have a little pullback, and you sell half on that 10%, and then the rest you'll trail, right? That's the name of the game, just to have a little come to Jesus, refresh on why we do this. Well, if you do get an Nvidia, right after earnings here or somewhere in here, right? Sure, sell 10% when you're 10% up, somewhere in here, right? And then you hold the rest, you just trail this moving average, or maybe, if that moving average is serving you well, you start to trail another one, and then suddenly you're up 30%, or if you're really patient, 50%, and you want to just trail a 100-day or something crazy like that. That's sort of the name of the game, just to zoom way, way out on what we're doing here. But profitable company, we know what they do, CPAP. We're not running the company. No one's going to claim that we actually know enough to work there, but we're not trying to work there. And then Abercrombie and Fitch, same deal. Hollister is doing well. The whole sector looks good. So those are the ideas that I have. If you like those ideas, hit that like button. If you want a free course on how to find the next Nvidia without gambling on startups, hit that subscribe. I'll post that in YouTube posts once a month for subscribers. And if you want to head over to the Discord at 9:30, where I'll be, hit that first link in the description, stockscommunity.com. 7-day trial for $25. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right. That's great that there's a video and all that, but what is going on with the stream? What is going on with the stream? Why can't I hear the stream?
Assets.
Can you hear the stream? Can you let me know in the comments? Are we streaming? It's supposed to be on YouTube. It's supposed to be on X. X is just glitching out. Sincerely glitching out. Like, what? How would you only be buffering on X? Sort of Elon anomaly. Whatever. I guess it's back. I can't tell. I guess people are watching too. I don't know. Drop a comment and with like a picture of a duck or emoji or something, so I know people are watching. I always assume the numbers on X are just bots because it's way inflated. But anyway, comments on YouTube. IoT and Rubrik is what we want to talk about, so we can get a little Fed injection here for a second.
Folks, that's just another way of saying money printer go burn. And Evercore, one of Wall Street's most respected macro firms, projected that the Fed may need to buy up to $50 billion per month starting in early 2026. Let that sink in, $50 billion per month. And usually when it comes down to the Fed...
50 billion, not to be confused with Elon's 50 million per month. What if boomers talk about valuation price? I can't do it in recent news. I would to talk similar tickers. And then this is IoT. What the? This is Rubrik. Okay, so point is, IoT 415 million in Q3, up 20%. Rubik 350 million, up 40%. They do GPS trackers and they do cybersecurity, I think. Right? Data security. Okay. ChatGPT is just going wild with the call to actions here. Trying to get that AI spend. I have spent money on Rubrik before, but I mean on ChatGPT before, but the problem for them is that there's other ones, so I can just switch over and use the other one. I don't have to just keep using ChatGPT, unfortunately. All right, whatever. They do security. I'm not that interested. Security is boring. IoT 400 million, up 20%. 300 million, up 40%. This is gonna surely I'm gonna misstate those numbers. It's like anagrams or something. And then this thing. Ooh, an alarm. These are pretty early on, so we'll talk about those. Okay. This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors could say to buy as much as possible before December 10th. The company is IoT, ticker symbol IoT, Samsara, which is seemingly unrelated to the ticker name and my name, but they had hundreds of millions of revenue, up 20% year over year. And what they do is GPS fleet tracking. So that might sound wildly niche, but the profit margins are huge because what you're talking about is a B2B product that basically gets deployed on every single employee's vehicle. So it's kind of like a cross between BDB and BTC. And if you think about like computer monitoring, like a software that monitors your screen so your employer can see that you move your mouse or whatever, those were big. Those are also easy to make, and maybe have a more sophisticated audience where they can, programmers are like, this one's expensive, let's just switch to this one. They tell their boss to switch, whatever. Truckers, fleet management, they're not less sophisticated, but in terms of tech sophistication, who knows, right? How a fleet tracking thing is more valuable than another one or works better. All they really need to see is GPS, right? And that's a pretty much a solved problem. So what these companies really are is basically marketing companies, these GPS fleet tracking companies. The leads that you can get, like the cost per acquisition that they can get is huge, because all they need to get is one trucking owner or one, trucking executive in a larger organization that has a lot of transported materials or whatever. Anyway, you get the point. They cost a lot to install, and then the sticking is high, so there's low churn because you just basically slapped these on all your trucks, and your product just drove around all over the country and got dirt on it and stuff. So it's a great business, even though initially it sounds like this is $100 million, multi-$100 million business. So anyway, that's IoT, and it's early for that stock. There's another stock that is early, maybe not quite as early. Rubrik, RBRK Software. This is a software company. This is a cybersecurity company, and it's in the same bucket as CrowdStrike, which we always, when we hear about, this airline, all the screens turn to like the blue screen of death, and you get those pictures in the news where it's like 2,000 flights grounded, in O'Hara because of, software bug. It's like, that's CrowdStrike. They probably don't want to be associated with that specific news story, but the point is they're super locked in to these big companies' systems, and they're the leader. CrowdStrike is actually the leader, I think, over Rubrik. We can check on that. But in terms of the chart, CrowdStrike, there's another one, ZS. They look okay, whatever, but Rubrik just had earnings. So that's the opportunity. You need the right company doing good at the right time. And so only Rubrik really fits that criteria in the cybersecurity segment. Cybersecurity, of course, really boring. No one appreciates it because, if it's working well, nothing has changed, right? Nothing has happened. So it's a cost center or whatever, but that doesn't matter for the stock price because you still have to pay for it. All right, enough blabbering. Let's jump into this right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, so this is IoT growth, 400 million, up 30% year over year, beat consensus. Profit beat consensus as well. And then ARR is that's revenue. I don't understand the difference between this annual recurring revenue versus, this is just the full year, 1.8 billion. So yeah, somehow the 1.8 billion is they must have added some people recently. I'm not going to try to nickel and dime these numbers, but the point is that they all went up, and they added some big companies. So this is what I'm talking about for these GPS tracker things. IoT is kind of like a, wishy-washy word. Do you really want your washing machine like playing music or, watching you? Probably not, right? But the fleet tracker aspect really took off because that saves a lot of companies, the companies who ship this stuff, the companies who are literally the shippers of this stuff, a lot of money. This is a recent company. It's only 10 years old or so. And yeah, logistics is what this is all about. So it's kind of an old industry meshing with a new industry. And, the old industry knows how to do things. The new industry knows how to do new things. So it's really a beautiful marriage. And they have 200 plus customers paying over $100,000 which is solid. I mean, 17 customers paying over $1 million. It is just a beautiful mix of numbers. It's not too much concentration. You know, unless you're Nvidia, you love that concentration because they're the best 5 customers in the world you could possibly have. But it's also not, you know, 1 billion consumers paying you money, which, unless you're ChatGPT, is pretty challenging. That's lightning in a bottle. So anyway, this is the company chart. It's pretty choppy. You know, it's pretty much chopped around since last year and change. And if we look at the levels, though, there's significant volume here. Could we have a move sideways? We certainly could. But what we do have here is this 45 level. So what's nice here is there's some movement. I mean, traditionally, the stock only moves, you know, a few percent a day, maybe less than 5% a day for sure. This is getting skewed, but 45 is the level. So what you can do is you can hop up, and because these numbers are so good, the profit beat significantly. Here you can see it did beat as well. Here you can see it did beat as well. Here you can see it did beat as well. So I don't know what these analysts are doing, because it looks like the profit beats the estimate every single time. And only in this case did the stock actually go up. So this is often why what we do is we kind of, I have to look at the profit and the sales and the guidance, because if there's a company that has blowout numbers for all of those, the thing can really rocket. And that has happened before. That's like a crazy episode. But oftentimes those numbers are kind of whatever they are. They don't match expectations. They do. People are expected. People have a feel on how the company moves after them. And then all you really have to look at is how the company moves in reality. So what we are seeing is, I'm sorry, I'll stop zooming in on this zigzaggy chart, is a couple days up. Okay. 15 million in volume. That's Q2. Q1, just sell off. We'll just ignore that. We wouldn't have wanted to buy that. Sell off wouldn't have wanted to buy that. Sell off wouldn't want to buy that. And then here's another one. 10 million, 4 days up. And, there was some continuation here. It doesn't look like much. Just 20%. It took a while. So right now we're getting that 10, 15 million. We got 4 days up. We'll see what happens. But there's definitely an opportunity for 15, 20% move here, and maybe more. And the maybe more comes into play by looking at similar tickers. So DGII, DSG would be the main ones. DGII. This looks strong. I mean, sure, it got helped by the market going up, but 100% move. DSG must be a private company, so we're just gonna have to ignore that. But this DGII definitely looks strong. It's not a crazy amount of volume, but keep in mind the dollar volume is the same, just about. Well, not really. This is $400 million of volume, and this is like way less than that. More like $10 million of volume. But there is activity to the upside in this sector. So there's some hope, is all I'm saying. This is a crazy base, and there's an earnings level. And if you buy at 46, here's exactly what I would say. If you buy at 46 and you risk at 45, that would be the best way to play this, right? Because what is the chances this goes to 60? Pretty small, right? I mean, within the next month, very small, right? But if you risk $1, you can make $10. You can go to 55, make that 10 to 1 risk reward, and you basically make up for all the times you buy one of these and it stops out. So that's the play. Not a lot of people are talking about this stock. generally that's a sign not to buy it. But I did see that earnings did super well. So it does matter. Above expectations is above expectations, even if it's modest. So that's IoT. We'll watch it. We're not going to hold our breath, but it's definitely early in that company's life. It's only a $20 billion company on what I just described as a massive opportunity that's overlooked. Rubrik. Now, let's talk about a company that a lot of people are talking about. So this one also kind of looks like trash. I mean, it's just been trading sideways. And, I'm purposefully not talking about stocks that, everyone's excited about. What's one that's not Nvidia that everyone keeps getting stoked on? I don't know, like Nbis or Navitas. It's like, great, you want to get excited in this like silicon substrate company that Nvidia invested in. Okay, maybe it'll go up and double again. But you're also kind of playing with fire here because you're kind of, messing around with the same sort of quantum rare earth move where they're having little bounces. But are they really going to bounce into Christmas? I don't know, right? So why not just buy companies that actually had earnings and sales and, have a risk level? So Rubrik is in that category. Talked about the way to buy these. You buy at 85, buy at 86, risk 85. Or, if you're watching the market, this is actually what actually can happen is, let's say this futures gaps down. And then it gaps down again. So what you can do then is you could say, hey, this is an important level, but really what I'll do is I'll buy at 83.5 and I'll risk like this after hours level, which is like 83. So you risk $2 and then you try to make $20 up to 105 like that over the course of a month or something. So that's the play, and that might not be exciting. I find myself reiterating this, just to make what is boring and repeatable, but not so boring that it's just indexing or anything, totally inactive like that. That's 20%, okay? You take a 10% position in this on a 500,000 portfolio. You put $50,000 in there. There's a ton of liquidity to do that. It trades $850 million a day recently. So you put $50,000 in there, you get 20% gain on that. That's 10 grand in a month. That's 10 grand on a $500,000 portfolio. That's not a lot, right? That's only a 2% gain. But, if you do that with 2 stocks, and I just gave you 2 stocks and they both do it, that's a 4% gain on your portfolio compounded over the course of a year is 60% gain over the year. So here's 2 security stocks. ZS, this is why you can't buy this. I mean, this is a falling knife. Great, Meta had a bounce, but you really going to expect all stocks to have a bounce that vicious? I mean, plus people were talking about buying Meta up here, and then it went down a further 8%. Great. You decided to buy United Healthcare because Buffett bought it. You got 20%, and then it sold off 20%, almost. So bounces, falling knives are hard. ZS is out of the question. CrowdStrike is fine. It's actually pretty interesting as this left side peak, but the earnings reaction was kind of so-so. So I don't know if right now is when you want to buy that. So those are some ideas. There's that earnings reaction. If you like these ideas, IoT and Rubrik, hit that like button. If you want a free course on how to find the next Nvidia without gambling on startups, hit that subscribe. I post that for YouTube subscribers once a month. And if you want to head over to the Discord, and it's a weekday, I'll be there. Hit that first link in the description, stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This
Excuse
is Sam Putnam. This is Sam Putnam.
Okay. So, mainline a little more Fed talk here.
injecting liquidity into the system, it doesn't just stagnate at 50 billion. It goes 50 billion, 70 billion, 100 billion.
billion.
Okay, and then you've got the Trump factor.
You get
Jerome Powell's term
injection.
as Fed chair ends, of course, May
You get a
2026,
check.
and Trump is going to get to pick
You
his
get
replacement.
stimulated.
And it looks like that's going to be Kevin Hassett, an ultra dove. So let me paint you this picture. QT is over. The Fed is already injecting.
All right. That's probably enough for now. Okay. What stocks are we going to look at now? I have an idea. Why don't we look at iRobot and Mags? Brilliant. This $3 stock is interesting. Max is interesting. It's got Meta. It's got Apple. It's got Microsoft. It's got Amazon. It's got Google. It's got Tesla. It's got Nvidia. That's 7 stocks. Hooray! Okay, so iRobot. Let's talk about their recent earnings. Is that even on the chart? Not great. There was some sort of move, though, on December 2nd. Because I did talk about INSP, I should check on what that news was that made this thing go. There must have been some news that made this go on the 24th. There was a price upgrade. All right, whatever. I'm pretty sure that was that. iRobot, I don't think was a price upgrade. And then this company, Mags. Let's see what ChatGPT spits out for this. ETF. Okay. iRobot news. Let's see, iRobot news. Guys, if you have questions or comments, and you drop those in the chat, that's cool. Oh, God, I hate this tool. Like, this always happens. This always happens. Undeniably. Freezes. This is trash. Absolute trash. Whatever. iRobot in the last few days. Oh, Trump administration considering issuing an executive order on robotics. Okay, so PDYN, RR, serve. Yeah. I guess iRobot just got the most volume because there's robot in the name. 140 million beat consensus estimates. Why is Mags doing well? Well, it's hard to say exactly. What's the weighting? That would be interesting information. Equal weight. Okay. Does the chart even make any sense as far as what these companies have done? Yeah, I guess so. Basically looks like the market. I mean, almost, I don't know exactly why it's better than the market, but I guess you could say Tesla is getting to an important spot. We're going to go with that. There is one stock that is about to skyrocket. Ticker is IRBTI Robot. They had hundreds of millions of revenue. It's up year over year. And Trump is reportedly, according to Politico, considering issuing an executive order on robotics. So some other robot names went up as well in the past week. Serve Robotics, SCRV. There's also a company that does like robotic bartenders, Rich Tech Robotics, ticker symbol RR, that went up. PDYN, another ticker that went up. So there's interest in the sector, I think, and hold your drink, but this company iRobot went up the most because it has robot in the name. Seriously. There's another company, ETF, that also is interesting if you're not prone to speculation, and that company is MAGS, so MAGS ETF. So Meta, Microsoft, Amazon, Apple, Google, Tesla, Nvidia. That's 7. So we can look at the difference between the overall market and those individual companies and the MAGS ETF. There are times to buy an ETF where it makes sense and it's not just, throwing up your hands in the name of diversification and saying, the market knows best, or, BlackRock knows best. It's like, no, it's okay to have some agency over your life, but you don't necessarily want to buy Microsoft when it's gone down significantly after that OpenAI equity re-agreement. You don't necessarily want to buy Tesla when it just went up 2 weeks almost every day in a row. But what happens is an equal weighted ETF is there are times when this ETF looks great and, on the whole, MAGS looks like the thing to buy. People even say that about ARK, Kathy Wood's fund. It's like, you may not love Kathy Wood's investments over the long, 2022, 2023 term, but sometimes the thing just sets up and you can hop in there from some momentum for 5, 10, 15% while, institutions, aka, Kathy or her henchmen are redistributing, their positions in that ETF or accumulating or whatever the word you want to use. But iRobot and MAGS, not financial advice. Let's start.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, so this is the MAGS ETF first off, and you can see what I see here. And sure, you could say, well, why not just buy the market? It's like, well, because if you look at the equal weighted market, okay, it looks good, but on a 5-year chart, since April, right, it's up a lot. But I'm totally grasping here what I'm trying to say. From October 2023, it's up 40%. If you look at SPY from October 23, it's up 80%, 70%. So that's why you buy the SPY as opposed to the equal weighted SPY, because really what everyone wants is to make the most money. And so they don't really care that the SPY is basically the QQQ, which is up 80%. 30-40% of those companies in the SPY are the tech companies, the Metas. We'll look at these in a second. The Microsofts actually look kind of similar, don't they? We don't want to look at these on a 5-year chart. What are we doing? The Apples, the Amazons. What are we doing? We want to stay zoomed in and then change the ticker. Thinkorswim. Amazons, the Googles, the Nvidias, the Tesla. And you're looking through those, what looks the best, right? Google and Tesla. Do you want to buy Google up here though? Not really, right? I mean, maybe, but it's moving 3% a day. It already had 2 big runs one of them after earnings. Do you want to buy Tesla right here? Not exactly, right? I mean, it had basically 15%, like 2 weeks. It probably goes sideways a little bit here with all these, people who bought here who are holding, and it's like, oh, Tesla's back up, I'll sell it. I knew I shouldn't have just, gone all in on humanoids in 2025. So sometimes you don't want to buy individual companies. And there are times where ARK ETF is interesting. It certainly looked interesting for a breakout here. And is it weird to do technical analysis on a massive ETF? Not if everyone else is doing it, right? I mean, it definitely worked. So the only thing you really don't want to do technical analysis is on like the VIX, right? Which, if I even know how to spell that, you see what I'm talking about. Like, oh, VIX is about to break out. It's like, no, this is some, hyper professional can tell me what this is. But basically, it's like a measure of like the put volume on the market, which is a like secondary uncertainty indication. So technical analysis is very unsophisticated. But on the ETFs, it's okay. That's what I'm trying to say. So there's some sort of flag forming here. We probably don't need to draw it there, but there's something going on. And you can risk, 50 cents to make $5. I think that's totally reasonable for a breakout. Are you basically playing the market? Kind of, but you are playing it with at least a little bit more of a tech bent. So if you're like going on vacation, if you are, not watching your phone like a hawk the next couple weeks during the holidays, mags might be for you. Now, for everyone who's like, what the heck, the title is one stock that's about to skyrocket at $3. Yeah, here is the stock. It's iRobot. And I'm not going to tell, everyone who wants to be super safe that this is interesting as a buy. I'm not telling you to buy it. It's just an idea, but you could buy it. And $3 is a pretty cheap price. And there's a lot of volume. Is a couple hundred million enough volume in dollars for you? You could put 2 million in there with the click of a button and walk away for the day, not even make the stock move at all. If you look at how it trades, on an intradaily chart, you can see that sort of activity, just boom, and then just boom. It's not, super liquid, and except for this was kind of worrisome where it went from, 2 to 1.5 in a couple hours. But the volume seems to be big enough recently where you're not going to get trapped. So maybe don't put more than 2 million in this stock, but I gotta believe if you're considering that, leave a comment and then we can talk about it. Otherwise, don't come at me about liquidity. So here's the idea. Here's sort of the levels. This is definitely interesting, this 350 level where it's at right now, because it basically has been riding that, testing that, maybe testing it over here. It's kind of murky. There's a lot of little levels up here because this was a flag and then a failed flag. And then I don't know what to say. It's a $1 stock. It does not move super smoothly. But what you can do is probably do what most people are doing, which is honestly what you want to do on these little rippers, which is to say it's not totally dependent on the market, right? Obviously, the market is not just going up that much. It didn't even go up at all, barely, when the market zipped up the most in the past 2 weeks. So if it's not correlated to the market, then maybe you want to risk this 350. So you risk 10 cents, look for $1, not $10. And $1 is not a crazy idea. I mean, 20-30% move in a few days is definitely achievable. Maybe even one day, although don't quote me on that. Monday this could dump. This could go up to 5. Could go sideways. But what you really want to do with this one is, if you're not watching your phone or your computer, get in set a stop that's 10, 20 cents below something that's off a level you feel matters, and make sure that stop triggers, or make sure you know how to use stops. If you don't, you can leave a comment or whatever, but people use them. They work. And there's definitely buying interest here. And just to, show what else is going on, maybe not to as great an extent. This is, went from 5 million to 20 million. So definitely 4x volume, but this is a crazy increase because it's such an illiquid stock. I mean, the volume over these days was like a couple million at most. And then it went from a couple million to 100 million. So it's like a 50x in volume. RR, same situation, maybe volume 4x. PDYN, same situation. Maybe volume doubled, not a lot. So the stock to buy in robotics definitely looks like iRobot. Now, you might say, okay, well, let's say this thing does go up to 5. I kind of want to know what they are up to. And that's fine. They do Roomba, right? You know Roomba. It was the original humanoid. They've also expanded out into a lot of other stuff, but I'm pretty sure Roomba is still the main dealio. I've driven by this headquarters. It's right off the interstate. And then, look, maybe all this other stuff will take off. Maybe it won't. Maybe it'll let it get acquired by Amazon for like $1 billion, like Ring, the doorbell thing, did. You get what it does, though. It definitely has an application. I mean, think about Shark. Think about Dyson. People buy vacuums, and by people, I mean people who spend money, and then by people who spend money, I mean women, right? So this is all checking out. Revenue beat consensus. The profitability was a little bit of a loss, but it beat the expected loss. So that beat expectations too. And then the gross margins, I guess, are actually slightly down, but not by much. And this is over here. I mean, this is not even related to this move. This is just here. So the revenue, the net loss doesn't actually impact the move right now. What you're playing is momentum. And if you're like, fine, you're giving me an idea for an unprofitable company. It's like, yeah, well, check out RGTI. Was this interesting to you? 200%. What about rare earths when Trump, also said something? Is this interesting to you? 100%. And there's a lot of arguments for it's illiquid, you can get trapped, and we already addressed those, right? If you're trading with more than $2 million per position, you're probably not of the mind to be disturbed enough to comment, but feel free. Okay, so that's the idea. And then mags as well, we've talked about. But in terms of other ideas, just generally, battery plays are kind of shaping up. AMPX is a 1 EOS. E might be a little bit more interesting. A little bit of a higher low there. EOSE, I think they do like Florida Power and Light. Is that right? They are the largest wind and solar. Oh no, that's NextEra Energy. EOSE is in Edison, New Jersey. Basically the capital of the energy company. I don't know. Edison just sounds good because of Thomas Edison, I guess. But battery storage is definitely needed. This is no joke. I mean, QS is another one, QuantumScape, that's sort of shaping up. I think EOSC looks the best. And then this recent IPO, BLLN, is on watch, although right now it looks like Frankenstein chart. CoreWeave is turning up finally. That might actually turn into the next hyperscaler. Give them a 10% chance on that. And then BTU, a little pullback, but coal still looking like it could be bridging the gap to natural gas and then nuclear. So that's on watch. Ulta Beauty, talked about that. That's another, well, I talked about it in an early video. Similar to Kohl's, similar to Abercrombie and Fitch. These retail companies are doing well, and that's driven by people wanting to, there's something about makeup, I guess. You just want to go in and you don't try it on, right? You don't put the lipstick on your face or the toner on your face or the, whatever it's called, the retinol. I don't know if like the micro needling people give their clients like a referral that's in person, or I don't know, for whatever reason retail is ripping. So there's Ulta Beauty. So those are the ideas though. iRobot, ticker symbol IRBT, and Max Up, ticker symbol MAGS. If you like the ideas, hit the like. If you want a free course on how to find the next Nvidia without gambling on startups or working at Sequoia, hit that subscribe. And if you want to head into the Discord on Monday, go to stockscommunity.com, try out that free trial. $25 fee. But basically free compared to the monthly fee, which I think again is affordable considering the value and the type of moves these stocks can make. All right, not financial advice. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.